What is going on, guys? Tempo Trades. In today's video, we're going to give you my updated 2026 daily bias video. Let's get straight into it. All right, guys, daily bias is really important because it gives you an idea of where the market wants to go, right? If you're on side most of the time with the bias, whatever model you use, whether it's IFEGs, breaker blocks, fair value gaps, whatever, you're going to have a higher win rate and higher consistency because you're on the right side of where the trend is or where the market wants to go. Now, here is something I didn't really quite ever agree with when I was learning ICT, and that's looking on the 4-hour, the daily, or the weekly. I personally do not really care about these time frames when it comes to day trading because, again, I'm trading the New York AM window. It's a 90-minute window, and whether the daily or the weekly is bearish or bullish, you can still find both bearish and bullish moves in that 90-minute window, regardless of what this higher time frame is showing you. So point blank period, to keep things simple, I was never a fan of like forecasting on Sunday or whatnot on the daily or the weekly. It's just too zoomed out. Too many things can change overnight from Sunday's overnight session to Monday's morning session. So what I like to do is I basically go on the charts 30 minutes before the market opens, and here is my process. Okay, guys, so we keep things very simple here. The first thing we want to look at is where is 50% of the daily range. This yellow line is 50% of the daily range. I will show you how to mark this manually. I personally have my indicator that does it automatically, but if you want to know where the daily range level is, all you have to do, just go on the 15-minute time frame, take your rectangle tool, draw it from the top of the range. Now, this range, I get this question a lot. This range is going to start at 6 p.m. New York time, and it's going to end wherever price is currently at. So in this range, where is your high and where is your low? Okay, your high is right here, as you can see, and your low is right here in this range. In this range that we have. So in this range, that's your high, that's your low. Once you've identified those two areas, you just take the rectangle tool, go to the high or the low, doesn't matter, drag it to the other area, and then this midpoint, right? You see the midpoint is going to be 50% of the daily range. Now, this is a huge level. It's a huge level. It's magic. I've been trading in the stock market for 4 years. This is by far the best level I've ever come across and traded with. You're going to see price bouncing off of it back and forth all day, every day. It is absolutely unbelievable. So the first thing I want to look for is where is 50% of the daily range, okay? Because the idea that ICT teaches is when we are in discount of the range, meaning at the bottom of the range, you want to long back up to the 50% level, and vice versa. When you're at the top of the range or you're in premium, you are going to want to short back down to the 50% level. And the idea behind this concept is that price is always going to retrace to equilibrium eventually, right? Sometimes, yes, we will have bullish trends and sometimes we will have bearish trends, but no matter what, price is always going to rebalance to 50% of the daily range. So if you can actually time these reversals when the market is going to retrace, that is where a ton of money can be made. And in my experience, I've just found it a lot more profitable and a lot more consistent to time these reversals rather than just get in the middle of, let's just say, like a sell move and hope that I'm catching the move and I'm not just catching like a retracement or a fake out or whatnot. So yeah, this right here is number one on how I use daily bias. I would say 80 to 90% of the time I am going to be looking to short in premium and long in discount. There are very rare exceptions where I will long in premium and short in discount, but they have to be really good setups with a certain special, confluences lining up. So this is just a good rule of thumb, so you're always on the right side of bias. Now, the second thing that I look for when we talk about bias, not only am I looking for premium and discount, but I'm also looking for liquidity levels. So this is a great example here. You have the London low down here. You also have a 1-hour swing low. Up here, you have an Asia high. So I'm essentially combining where I'm at in the daily range with where my liquidity is to tell me where I want to go. So an example right here, okay? Now, we are below the 50% level, right? So we should be looking for longs, but because we have such an important liquidity area right here, which is the London low, I know that price wants to go seek out this liquidity, sweep it, and then reverse, right? So my bias in this situation, short term, would be bearish just down here to this level, and then I would be flipping bullish once it sweeps and looking for a long. Okay, now a lot of the time I'm not taking these quote unquote draw on liquidity plays. You can, where you're actually taking a play before the sweep and you're just expecting price to go hit that level. That has a lower consistency than the actual sweep reversals. So a lot of the time in this situation specifically, I would just be like, okay, I know price wants to go down here. I'm just going to let it do its thing, wait. And then once it finally does sweep that level, I'm going to be bullish and looking for longs. All right, guys, so we're going to look at a couple of examples here in real time. These are all like pre-market looks this past month. So here's another example. Now you could see right before open, what are we looking at? Well, we're not really in premium. We're a little bit in discount. We're pretty close to that yellow line, which is 50% of the daily range. So my bias right here would just be neutral. I would wait for open. I would want it to either sweep down here, these lows, and then I would be bullish because I would want to look for longs back into that middle of the range. And then if the open is actually pumping, right, and we sweep out these highs up here, then once those sweep, I'd be bearish and I'd look for shorts back down into the middle of the range. It's really that simple, guys. You don't need, you know, the weekly and the daily and the you don't need all of that to understand where the market wants to go. It's just based all on liquidity. Here is another example right here. So you could see right before open, we're actually pumping. So right before open, this is actually extremely bullish. And because we're high up in premium, we're about 150 to almost 200 points in premium. We're also sweeping these green lines, which are just hourly and 4-hour levels on the higher time frame. My bias going into the open would be bearish. I'd want price to reverse off these levels, and I'd be looking for shorts back down into equilibrium. So that would be my daily bias for this day. And then we can see right here, my daily bias actually paying off perfectly. So in this screenshot on January 8th, I said NQ swept London highs. I can see shorts working, but since the volume's poor, I'm waiting till open. So this was at 8:56, 30 minutes before the market opens. Again, I'm not forecasting my bias 24 hours before, 12 hours before. So much can change overnight. And because we're just trading in a specific window as day traders, there's no point. Like you're zooming, some people just zoom out too much and there's literally no point. So yeah, I was looking for shorts, preferably near open, and then you could see here at the bottom we actually did our price actually did sell off right here, so the bias played out, I mean, absolutely perfectly. Okay, here is another example, kind of like the first example. This is a neutral bias look. So if we have a liquidity level above and we have a liquidity level below, just like in this situation, London high and London low, pre-market, we're kind of just stuck in that London range. There's no bias that you should have. You have your two levels marked out. We're in the middle of the range. Literally just wait for one of those levels to sweep and the market will tell you what the bias will be, right? If we come up here and we sweep these highs, I'm looking for shorts back down into the range. If we come down here after open and sweep these lows, I'm looking for longs back into the range. It is literally that simple. I rinse and repeat this process every single day, and I am milking these prop firms. Okay, second to last example right here. Once again, we have a sweep of the high. We're in premium of the range, meaning we're above the daily range level, the 50% level, and we're also sweeping liquidity. So what do I want to do? I want to look for shorts, and I don't remember if and here's the example. This is the same exact day. Yeah, you could see here. So if you look on the bottom, this is February 26th, and then this is also December 26th. So that exact thing played out later on in the market. This screenshot right here is before market open, and then once the market opened, we actually got that short move. So, and we retraced right into equilibrium. It happens every single day. So guys, hopefully you enjoyed. This is my 2026 daily bias video. Again, I can't stress this enough. It does not need to be complicated. You just need to have a simple process. And if you back test this, you will see that I get the daily bias right a lot of the time. And this helps me get, $10,000 every single month plus from these prop firms. So if you enjoyed this video, please let me know what you think in the comment section below. Subscribe. I'll be posting more videos all year, and come join us in the Discord where I'm actually live trading this process every single day so you can see it for yourself. All right, take it easy. Peace.